Hello, welcome friends. My name is Avinash and I welcome all of you to another interesting episode of Corporate Face-to-Face series. Friends, in this Corporate Face-to-Face series, we introduce to you emerging companies from emerging sectors, and we make a effort to talk to the promoters to understand their companies, their business models, their growth journey. And in this process, we get a lot of valuable information from the promoters. And friends, today we've got a very interesting company which is going to hit the capital markets very soon. The company's name is Emmforce Autotech Limited. And we have the privilege and the pleasure of having Mr. Ashok Mehta, who's the chairman and managing director of the company. Ashok ji, first of all, thank you very much for sparing your valuable time with us today. I'm pretty sure that in this small interaction, we'll be able to understand your company's operations in a much better manner.
Thank you. Thank you so much, Avinashi. I mean, it'll be a pleasure sharing any information that you would like to know about us.
Yeah.
So we are a very transparent company. So please feel free to ask anything you like.
So Ashok ji, first question, which is very elementary. I think, we are a very old company in the auto component space. If you could tell us, what is the main product line of our company? In fact, what is the business model of our company? And, going forward, what is the positioning of Emmforce Autotech in the domestic auto component market? And a little bit about yourself, how did you get into this business? Is this a first generation company? And how did this business journey of Emmforce actually start? So if you could please share your thoughts.
Okay. Avinashi, you know what? I completed my CA in year 1991. And I was a part of a large family which was into a traditional business. And myself was given the responsibility to set up factories to get into a scalable business model. So me and my brother basically immediately after I completed my CA, we went to Himachal Pradesh to set up this plant for making axle shafts by the name of Emmforce. So this family was large, so it has grown big, and over a period of time, as family grew. So in 2012, I became independent, and there was one company by the name of Emmforce Automotive Private Limited that I was given to, as my share. And at that time, I had been taking care of exports business all my life, and I decided to set up a new company, which was a partnership by the name of Emmforce INC, which is converted into a limited company in October 23, which is Emmforce Autotech Limited now. So in 2012, late 2012, I had started from scratch the Emmforce and started with making some drivetrain performance racing spools and differential housings and yokes and some front axles and spindles. So, that was basically a journey starting off with the parts, which were value-added parts. And as the customers started having faith and they wanted me to get on to some complex parts. And for me, by nature, though I am a chartered accountant, but more than that, I am an engineer in a way. And I've also authored a book on axle shafts by the name of The World Around Axle Shafts. So that's the only book written on axle shafts so far in the world.
Okay.
So the way it happened is, they gave me the product. They saw the confidence that I had to develop a part. So they gave me some parts which were like four-wheel drive locking hubs, which very few people in this world are actually making. So they gave it to me and they came to me that, okay, here are some problems that they need to solve and can you do it? And we started, and I have the basic thing we do is, our core specialization became is we concentrated more and more on the research and development. So for me, Emmforce was always an engineering design company and then a development and a manufacturing company. So that gave us an edge over the market, and we started making those parts. We designed those parts based upon the inputs from the customer, the way they thought it would run, and the day we could make it, the customer were able to file the patent on the product, and they could really get a good value out of it. And that was one journey for getting into the sub assemblies, and that was the start. And after that, this journey has been going on very good. We could develop a complete range, which we are still doing. And apart from that, we ventured into spindles, and we also ventured into another product, which is like shift towers. The gear shift towers is again another unique product, a proprietary product, which we designed. And all these products, that we do are sometimes, they are something the customer needs better than what an OE produces.
Correct.
When it comes to performance racing, the basic driver's need is that his product should not fail in, racing, or even when he's driving on the off-roads or anything. And even when you're into four-wheel drive segment, because that is what the segment that we cater to, four-wheel drive and performance racing.
Okay.
So those are enthusiasts and they always look for better and better parts. So we started making those, and that has been our journey. I mean, we are core into the drivetrain parts, I would say, and we position ourselves into this unique niche segment at all times.
I think understood. In fact, now Ashokji, coming to the total addressable market, in which you operate the drivetrain components, on the ground, if you could tell me, in your assessment, since you understand the market in a much better way, you get signals from your customers. Tell us one thing over the next, say, 3 to 5 years, how big is this market in terms of the opportunity size, and how would our company, that is Emmforce Autotech, how would we plan to capitalize on this growth? Because I believe obviously four-wheel drives are definitely now, the flavor in the market. Obviously, you
Yes.
said racing car segment is also a growing segment. So, from these segments, what is the kind of growth you visualize in the next, say, 3 to 5 years? Even without giving any numbers, if you could just give your thoughts so that we can understand, what's the potential for our company going forward.
You see, drivetrain component segment by default, it is like today it is a $400 billion, which I would say simply 30 lakh crore business, a global market. So even if I look into a 0.03% market share, it becomes 1,000 crores. So the market size is really huge. And with our past experience, we have our credentials with us. Customers are looking forward for us to grow. And we are looking for the avenues in terms of, that, okay, how can we really make some scalable products which can really grow? We have already developed the hydraulic gear pump, which is again a proprietary product, where we are going to compete with big brands like Rexroth and Parker, which are like the world leaders, and we have developed the big ones. So we have also developed like differentials for e-rickshaws, which we are going to launch in the next few days.
Okay.
So the basic things, market is really big, then the potential is really huge that we see. And China plus one story is another big factor that is coming in favor of India, where we are really seeing a big inflow of inquiries where customers just want to stop the import from the other country and ship to India.
Okay.
And I just believe that if India gets just 5% out of China, India is going to be overbooked.
Okay.
That's the level of inquiries that we are seeing.
Okay. Oh, fine. I think Ashokji, now coming to the kind of to the kind of customers we cater. I was looking at your presentation and your prospectus. If you could still tell us, some of your marquee customers, which could give us an idea about what is the kind of profile and credibility, Emmforce enjoys. So, if you could share some few names, which are your primary anchor, marquee customers.
All right. You see, our customers typically are as big as even Ford Performance in USA and Dana in USA, and Dorman for that is a very big customer for us. They are like a Nasdaq listed multi-billion-dollar company, and apart from other big companies that we deal with and we have been dealing with for years.
Okay. And typically, in terms of segment, Ashokji, if you could tell us, is it the passenger car segment, or is it the when you say drivetrain for four-wheelers, is it the higher end SUV segment, or is it the
Yes.
commercial vehicle segment? If you could, at least tell us the segments in which the company operates, that will help us relate your company in a better.
Absolutely. If you see, ask me, I mean, so far, 80% plus of our business is into the SUVs, high-end SUVs, which like people would call, I would say 65%.
Okay.
And then would be the commercial vehicles, commercial trucks. But passenger vehicles is like least for us.
Okay. Understood.
Our major focus is to that industry. So,
Fine. So,
yeah.
Ashwini, now next question, which is important, is that when we develop a new product, or maybe an existing product is already sold to existing customers, typically tell me one thing, that how is the pricing decided? Because we operate in an industry where the material cost, where the conversion cost, the labor cost, all that has to be factored in, and then you supply the final product to the OEM customer. So tell me one thing, how is the pricing decided? Is there a normal price increase which you get in case raw material prices go up? Or is it a contracted price where volume is assured, and you are given a typical volume from a OEM customer, and you have to operate your cost within that budget? So how does pricing work, in general?
You see, we basically we don't work in the cost plus environment. That is typically for the OEMs, and we don't really work with them to a bigger extent. It is like a very limited portion of our business. Our business basically revolves around adding the value to the customer. And we generate the products because we are the ones who design the products for the customer. We are the ones who test the products and give them that, okay, this product has this much of endurance life. So it is not the cost plus model. It is basically the the sales price model, where we make sure that yes, the customer is also making good amount of money in his business, because they are the ones who are ultimately going to sell.
Exactly.
So it is a win-win situation that we work upon at all times. It is never like, and at the same time, when it comes to price increase, typically, every customer, whenever there is any major increase in the market, every customer understands if there is an increase,
Yeah.
and nobody says no to it. But of course, we believe that we believe that we should not really be approaching the customer time and again for price increasing, and because we believe in giving a value to the customer at all times, at all levels.
Okay. No,
That's our simple mode.
Well, I think
Yeah.
understood, very nicely articulated by you, Ashokji. Ashokji, now tell me one thing, in terms of, I think in terms of your financials, I was seeing last year, I believe for FY23, your top line was slightly less as compared to the previous year. Now, what was the reason for this drop in revenue? Of course, profits have also come down, but was there any major reason by which, top line has come down? Because we saw that in FY24, as of October, the revenue has again bounced back, the profitability has also bounced back. So anything special happened in FY23 for the top line coming down?
Yes, it is basically not at our end. It is typically, if you see, post the COVID, when we saw, if you see 21, financial year 21, 22, we saw 40% plus increase every year. So the sales went up because of the supply chain crisis. The demand was coming from all corners. And there was a situation where customers had excessive inventories, because the demand was flowing from the end users, and customer was not able to understand whether this demand is actually real, or whether the same customer is going to three distributors and all three
Correct.
distributors are asking for it. So there was, an aberration at that time, and it was basically an activity of destocking. So all that happened in year 23, which affected us. And now, 24, we are back to the normal situation. And then some new projects also have materialized, and we are into full stream. And if you see, I mean, in 7 months' time till October, we have already crossed what we did in 23.
Correct. Exactly.
So, yeah.
So
So, and
finally,
the profitability also, in the same line. So there's nothing abnormal otherwise. But of course, life is always ECG, so it's never
yeah,
perfect in business.
no, I think
But it's for a good reason. We understand that.
you are absolutely right. See, I think business has got to be always long-term oriented. Quarter on quarter or year on year is not the way to look at it. Ashokji, now tell me,
That's
in
right.
terms of the competitive landscape, we are into a product which is very critical for the automobile OEM. Now, tell me one thing in
Mm.
terms of competitive intensity, is it a highly competitive intensive market, or are there selected players only in the market which have got a concentrated kind of, exposure to the customers which we also cater to? And second related question will be, Ashokji, apart from the financials, in what way are we a differentiator in terms of our product, in terms of our designing, in terms of our R&D? If you could, single out, say, two, three qualitative parameters, because that would help us understand the company's, competitive modes in a much better way.
Uh, you see, I would tell you like this. How we get differentiated. Let me just answer that question first. You see, we are an R&D based company, number one. Number two, with the space we are into, where the customers are, we act as a one-stop shop. So typically, if you look into the Indian landscape, you will see that the people are more toward the OEM segment, where one person is doing one type of components and they are working on that only. And what we do is basically at our level, having the design facilities is actually a big thing. And we have actually mastered that art. We have understood. We invested heavily on the design segment, research and design, and that has basically helped us reach this level because we are able to design the products. We understand the materials. We work with different type of materials like an OE. If you really ask me, at this level, we work with not only the steel. We work with forgings, castings, aluminums, brass, rubber, plastics, every type of material we work with because we have to use those in our assemblies. So that knowledge base that we have is a unique feature because that, and then the strengths that we are able to give to the customer, that is a unique feature that the customer is able to get from us. And then market is not really oriented. If you see, especially the Indian market, they're not oriented toward these sort of products. So we don't really see any competitor in India which is making the same products.
Oh,
So that is basically gives us an edge that we are into those unique things, and we are able to and the amount of investment that we have done in tooling is another unique feature that we have, and we invest heavily on those toolings and on the R&D. So that these are a few unique features, being one-stop shop, because customer doesn't really have to go here and there for too many parts that they have to buy. And in developed countries, this is a big problem for them. Yeah.
Ashokji, just one simple question now, since you said that you do a lot of designing and you work with the customer very closely. If you could give us some idea, how many SKUs do we have in our product range? Like, obviously, I believe you all must be designing new products, existing products must also be sold. On an average, हमारे कितने SKUs होंगे?
We would be having more than 1,000 SKUs, but what I would tell you is we have about 50 product families that we make, and majority of those are made under one roof.
Okay, fine.
That is the beauty that we have.
Okay.
If you look behind the picture behind me, so you will see majority of these are the parts that we make, and these are made by us in-house.
Okay.
90% of these.
Okay. So basically,
Yeah.
please correct me if I'm wrong, Ashokji, but it means it's a very integral setup. Everything is made in
Yes.
one factory at one place. So that is what the customer
Yes.
also gets, and that also benefits you. Okay, fine.
That's true.
So now, Ashokji, now the most important question for today's interview is that if you could tell us something about the forthcoming IPO. I believe the company is hitting the capital market. How much capital is the company planning to raise, and what is the broad objective of raising this money? If you could share your thoughts.
You see, the IPO is going to be for about 53.9 crores, and it's opening for public on 23rd of April and closing on 25th of April.
Okay.
So in terms of objectives, this is one objective is to take care of the working capital requirements of the company. And the second is to invest into the subsidiary company, which we recently started. So to meet its working capital needs and the margin money for the term loans that we have availed from the banks.
Okay.
So that is the thing. And I must mention here again regarding the subsidiary. This subsidiary is again going to work a lot also on the India story because that is getting onto the agricultural space. So this subsidiary is having one is, we have added the forgings. So as a backward integration to be self-reliant, as I said, it's an integral facility. So we try to have the things in-house. And the major investment has gone into making rotavator blades, which is used for agricultural equipments. So typically the market size for those is about 1,200, 12 and a half crore blades, and we are going to make about 60 to 70 lakh blades every year.
Right.
So this is a fully automated plant being imported from Japan and being controlled through robots, and we're going to produce one blade every 3 seconds. And one rotavator would need about 50 on an average blades, and the life of this blade is about 1 year.
Okay.
So this is a good technology product where the type of technology we have brought in, only two more companies are there, which are producing the same. And since it is a highly efficient process, so we are working towards creating some special angles, and we are also working towards reducing some weight on the component. So we're going to have an edge in the market, we feel, going forward as we put this product in the market. And also this is going to give us an advantage for adding some more products in the agricultural space.
So understood. I think nicely put out, Ashok ji. Now, regarding the subsidiary, I wanted to understand when is this subsidiary going to get operational, And second question, Ashokji, I would like to know that what was the strategic reason for the company to actually float this business via a subsidiary and not via a division? Any specific reasons for this?
Yeah, there are. So, this subsidiary has already come into production in the end of March, the phase one on the forging side, and the blades are going to be in production next month. So the equipment is coming, to the port by this weekend.
Okay.
And yes, there was a very specific reason for having this Emmforce Mobility Solutions Private Limited as a subsidiary, because this company is going to have a 15% income tax rate under Section 115 of Income Tax Act.
Okay.
So
Okay.
instead of 25%, it is going to have 15% tax, which is a perpetual benefit given by the government of India.
Okay. Okay. Fine. That is really nice to know because that would actually improve your cash flows and your profitability. That is something which is
Absolutely.
important. Ashokji, now
Yeah.
talking about the working capital side, you mentioned that a large part of the money which you will be raising will be used to fund working capital. Can you tell me what is the normal working capital cycle in our business? Because we keep hearing auto component vendors, sometimes the working capital gets elongated. I mean, typically right from the time you get the order, you store the inventory, you produce the product, and then you deliver it to the customer. In how many days typically do you get your payments from your customers? I mean, what's the broad working capital cycle, if you could tell me?
You see, our average payment would come in 90 days, but the net working capital, because we work on order, we don't have any inventories to manage. So our average working capital cycle is 60 days. And once the money is there, we that will give us a leverage to buy the things in cash and add more to the bottom line.
So
Yeah.
typically 60 days is the normal working capital cycle. Is that what you say?
Yes. The net working capital cycle.
Now, one related question to this is, Ashokji, since you'll be getting working capital, via the public issue, can we assume that because you get working capital, you get upfront, money, you can obviously buy in advance and get some cash discounts, from your vendors. Can we expect that now the new business which you have started, which possibly has now will get ramped up in the coming months? Now, will this also help us increase the top line as well as the overall profitability of the company? Without putting a number, if you could just tell us, is this possible and will this be reflected in FY25 or will we have to wait for FY26?
You see, all I can tell you is, we have a past record where if you look into the past 10 years, we have grown at 25% CAGR for sure at all times. And our margins have also been consistent. It is not that these are like short term or 1 or 2 years or 3 years. This has been the range within which we have been working for all these years. And the intent is always to really create a value for any stakeholder, whether it is myself or anyone. So that I don't really see any reason why we will not be in a position to add things. Of course, if I look into some improvements, maybe some will be in 25 and some more will be in 26 because the funds deployment will definitely take some more time. So those things will definitely be there.
Okay. Fine, understood. Ashokji, now last question for today is, every business has got some risk attached and we have been in this market for a very long time. Now, apart from COVID, which was a universal issue for every company in India, what are the broad,
Right.
risks in our business? Like, typically since we are in the auto component industry, obviously the health of the auto sector is important. But any other business risk which you think is very critical? Or secondly, how have you managed this risk and still remained quite profitable for so many years? So if you could just share your thoughts on this aspect.
I tell you like this, when we are working in aftermarket, what happens is whenever there is a recession in the market, the demand for the automotive components in aftermarket goes up because people don't buy new cars, they end up repairing more. Second thing, if you look into our major market is US, and in US in the last 10 years, the average life of vehicle, which used to be in the range of 9 to 10 years, is now going to touch 12 years.
Okay.
And which means the longer is the life of the vehicles, the more repair it is going to have.
Exactly.
Because as vehicle grows old, the repair cost goes up.
Exactly.
So those are few favorable things which are in our favor apart from the other China plus one story and other thing that I said. And the risk that I perceive at all times just could be the geopolitical reasons, but the way we are growing and the way things are, we don't really see, because we are like with the new project, we are getting on to and cash on India market in a big way. And also we will be adding in some more countries. So we don't really see that as a major risk as well.
Understood. Ashok ji, just one last related question. If you could tell me, what is the broad breakup between domestic and exports? From exports, what kind of revenues do we currently earn, and what is the share of domestic? If you could just tell me this.
Honestly, it is 98% is exports.
Okay, fine. So it's basically a
So more
large
than
export
everything.
driven.
Yeah.
I think
Yeah, that's right.
so in fact, then Ashok ji, domestic market mein, the kind of opportunity which we are seeing, like, almost all the segments which we operate, I mean, here also the demand is growing exponentially. So will we consider that apart from the domestic export market which we cater, will domestic market also play now a big role for Emmforce in the going, say, couple of years ahead?
Sir, India is a big story for agriculture implements going forward. There is a big demand. There is a big gap there in the market. And through Emmforce Mobility, where the major segment, major business is going to be into Indian market and only. So the demand for the rotavator blades itself and other parts is going to be so much in India. So we won't be in a position to fulfill that.
Okay. Oh, fine,
Yeah.
understood. I think that means that we are going to get the benefit of the domestic market also, apart from our stronghold in the export market. So I think Ashok ji, thank you very much for your valuable time. I think we had a very good session. We could understand your company's operations in a much better way. Please accept my congratulations to you, your entire management team, and best wishes for your forthcoming public issue also. Thank you very much.
Thank you so much, Avinash. It was really, really nice talking to you, and look forward to have any more interactions, any clarifications. Please feel free.
Thank you.
Right, sir. Right. Thank you so much.